Welcome back. You're watching Closing Trades and thanks for staying with us. We're coming to you live from the Suzlon studio with Dipan Mehta, Elixir Equities, and Nagraj Shetty as well of HDFC Securities. Deepan, I'll come to you in just a minute. Let's quickly take a chart check first. Nagraj, what levels are you looking out for? And it's a healthy move on the index, at least today. Despite all the negatives, we're doing fairly well on the index, right? Last couple of days.
Hi, good afternoon. Yes, market has been in a range-bound action at the lower levels, 24,000. Below that, 23,800 is a strong support for the market. On any upside, around 24,200 and 24,500 are likely to be our resistance. Market is likely to move in a choppy moment, range moment for the next one or two sessions before showing its further course of action.
What are the levels you're looking out for on the index, Nagraj?
Yeah, immediately I'm looking for 24,200, 300 levels resistance. Once it breaks out, then we could see Nifty heading towards 24,600.
What's the support, Nagraj, on the index?
23,800 is going to be a support.
Perfect. Okay. And what will drive, Nagraj, the moves? Banks, you believe? IT, you believe? What will be the drivers?
IT has bounced back very well from the lower levels. We can say that the formation of a crucial bottom reversal for IT, more upside is likely for the IT after a small consolidation. Bank was moving range-bound action after a decline. It has shown some choppy movement recently. I'm not expecting a bigger decline in the bank as well. At the lower levels, 50,000, 56,500, 50,000, 57,000 is going to be the support for the bank Nifty. And eventually, I'm expecting the bank Nifty to bounce back from the lower levels.
Okay, that's a take coming in on the index at that level. But Deepan, hi, good afternoon. Also give us your sense in terms of how you're reading the market. Resilience largely is something that we're seeing in the market given everything that's panning out geopolitically. And we've been in that range, but nonetheless, we're showing some good resilience when it comes to the market. How are you reading the market moves at present?
First of all, good afternoon and thank you for having me on your show. I think the Iran war is going the way the Ukraine war has gone. And while there were tremors when the Ukraine war started, but then after 4 or 5 years, it's become business as usual and like a new normal. And I think this particular war with Iran also is going the similar way, where despite blockades and despite renewed hostilities, the impact on the oil market has been limited. Of course, it has gone up from 75 to about $80 or so, but it is not threatening. And I think businesses, countries, policymakers, they are moving ahead and going ahead with whatever has to be done to ensure that supply chains remain strong, export markets are revived, and domestic economy is safeguarded. And I think look at the way the earnings season has shaped up so far and whatever peak quarter releases we got, I think the impact has been far less than what we expected. So I think that by and large, the market looks good. There are some challenges when it comes to large cap stocks, but I think that we have a very, very vibrant small mid cap universe. And I think that's where investor attention is focused on.
Okay. And Deepan, therefore, what should you start going long on if you can give us a sense?
See, I think there are a lot of investment themes playing out which are showing decent growth, and investors are aware of these investment themes also. They are working on it also. Like, of course, the biggest investment theme going around in town these days is the defense investment theme, and that's just showing no signs of slowing down. We are seeing a whole host of public and private sector defense companies do exceedingly well, given good returns. And now order books also are steadily flowing to these companies, providing earnings visibility. So that's one very strong investment. And then this entire data center and rising electricity energy consumption, that also is a very strong mega trend. And that's having its effect and benefiting many sectors, I would say, right from transformer manufacturers, transmission companies, and even I would say that it is benefiting a lot of the companies engaged in providing data centers as well. So like that, I think if you go step by step, I think there are very strong investment themes playing out, and investors are aware about it. We've discussed it on your channel as well. The fact of the matter remains that there are enough growth stocks. It's just that valuations sometimes tend to go out of hand. And when you find an attractive stock at reasonable valuation, And mind you, we are still looking for it. I know your next question. But when you find attractive stocks at reasonable valuations, that's a good entry point. And lastly, I think we are entering into a earning season. So I'd just like to say that there's always a lot of stock specific volatility. Stocks go up 5, 10, 15, 20% on good results, go down on bad results. So better to understand the company's results, management commentary, and then make a fresh investment.
Deepan, I wish we could predict Donald Trump's moves the way you predicted our exact next question. So while you find out where the valuation is looking attractive right now and what's looking good from an earnings point of view, let's refocus. Let's talk about the India-UK FTA that has come into effect today, unlocking duty-free access for Indian exports. The new trade pact offers significant export chances for manufacturers, lowering tariffs and benefiting sectors like textiles, leather and processed foods. My colleague Ashesha is joining us with the lowdown.
Well, yes, so the India-UK Comprehensive Trade Agreement, which was signed in 2025, somewhere in June or July last year, is all set to come into effect today. That is the 15th of July, 2026. And a whole host of sectors are likely to benefit as a result of that. The trade agreement says that the bilateral trade between UK and India is likely to jump 2 times by 2030. It also means that tariffs on 99% export goods to UK will be cut. India has opened 89.5% tariff lines for UK into the Indian market, and 24.5% of exports get immediate duty-free access. Those are largely the 4 main benefits across sectors for India as well as the UK market. Let's put the spotlight on a couple of products which get duty-free access in the UK market. Processed food, vegetable oil. We also have transportation and other auto products which are exported, leather and footwear, electrical machinery. We have textiles. Textile is one big factor and one big sector that will tend to benefit as a result of this. Wood, paper and a couple of other products which will get duty-free access to the UK market. Other than that, we also have base metals, machinery, minerals, and a couple of other products which include dairy. Dairy, of course, is a sensitive sector for a market like India, and hence India has safeguarded sensitive sectors like dairy, cereal. We have millets. We also have pulses and a couple of other products that are flashing for you on your screen. So these are some sectors and products which India has safeguarded as a part of India-UK bilateral trade agreement. But 2 sectors which are likely to be in focus on the back of this, one from the alcohol beverage industry, and that is because import duty on whiskey from 150% currently is likely to come down to 75% immediately, and over a period of next 10 years, this duty will come down to 40%. Meanwhile, UK-built vehicles which are imported into India, from the current 110% duty, the duty will gradually come down to 10% over the next 10-year period. So these are 2 sectors which are likely to be in focus on the back of this reduction in customs duty as a result of India-UK bilateral trade agreement. Meanwhile, British goods will also get free access into the Indian market, and hence competition for these sectors back home in India is likely to rise. One of them, of course, is chocolate, soft drinks, non-alcoholic beer. We also have gingerbread, sweet biscuits, auto parts, machinery, textile, and mechanical tech devices. These are some sectors where competition in the Indian market is likely to increase because British players will now be able to export into India without any kind of duties. Let's also talk about India and UK's trade then. In FY22, India's exports to the UK stood at about $10.5 billion, while imports stood at about $7 billion US. Fast forward to FY26, we have exports which have risen to a solid $13.5 billion US, and imports meanwhile stood at about $12 billion US. So that's how the trend has been for import and export into the UK market from the Indian market. So that's how the statistics plays up. Meanwhile, we also have Prime Minister Narendra Modi, who has said that it creates unprecedented opportunities for our textiles, leather, gems and jewelry, engineering goods, marine products, chemicals, processed foods, MSMEs, farmers and manufacturers. It also opens new frontiers for our IT, professional, financial, education and business services sectors while expanding mobility for Indian talent. So that's the view coming in from Prime Minister Narendra Modi. But yes, several sectors, especially some like textile, are in focus on the back of this India-UK FTA coming into effect from today.
Hi there, welcome back. You're watching Closing Trades on ET Now, and you've caught us live from the Suzlon studio. And let's keep the conversation going with our experts, both on the fundamentals and technicals. We've got Dipan, Mehta and Nagraj Shetty, who've been with us for some time now. Nagraj, coming to you, share with us your stock-specific recommendations this afternoon. What's looking good on the charts?
Hi, I have two stocks on the long side.
Okay.
First one is LIC. LICI has been in a consolidation phase over the last few weeks and made an attempt of breakout somewhere around 448, 450 levels. The overall chart pattern is looking positive. Daily RSI placed above 60. I'm expecting more upside in the near term. Currently trading around 440. One can look to buy at this current market. Immediate target would be around 465. One can place a stop loss at 425. Second one is RACL Gear Tech. The stock has been moving in a larger consolidation phase, kind of a triangle pattern, and currently in an attempt of breakout of the pattern somewhere around 1365, 1370 level. The overall chart pattern is indicating a possibility of sharp up move in the near term. One can look to buy at this point of time. 1425 is going to be the immediate target, and one can place a stop loss at 1330.
How, Deepan, you're looking at the life insurers because ICICI Pru Life's numbers came. I'm not sure if you had a chance to look at it. 26.7% on that VNB margin number, 15% growth on APE. This was not penciled in, frankly, from an expectation standpoint. It's a resounding beat, and this is one of the more reasonable, or in terms of valuations, one of the more reasonable names. I don't know what to make of the numbers and life insurance space in general because stocks haven't moved much.
See, first of all, these life insurance companies are very difficult to analyze and track. And from time to time, good results come also, and stock prices move up as we have seen just now. But it's a highly competitive and highly regulated industry also. And look, there's only so much of money you can allocate to financialization of savings. And I think rather than the insurance companies or the asset management companies, we are more positive on the say stockbroking companies or the exchanges, and the best within the entire category, of course, are the wealth managers. So I think that insurance companies are good, steady performers. And in times when the market is in turmoil, I think they are good, safe players as well. But from a growth perspective, I think there are better options within the larger, broader financialization of savings investment theme.
Deepan, how are you looking at the tilt between large private sector banks and PSU banks? We've got a bunch of large private sector banks earnings over the weekend. How are you expecting the numbers to look like? And also on the PSU front, that index has been doing well off late for the past couple of trading sessions. Any favorites from that basket?
I thought Bank of Maharashtra and Indian Bank came with very good set of numbers, and their performance, qualitative, quantitative, is giving all the private sector banks also a run for their money. And I think that next quarter, couple of quarters, banking sector also should do well because of increased inflow of foreign currency, NRI deposits, ECBs as well. So they will have more money to lend, and the kind of challenges coming in terms of raising deposits that may get addressed over there. But look, medium to long term, banks are becoming a red ocean, and I wouldn't want to get too overweight in the banking sector. In any case, I think banks, financial services are now 37% of the Nifty index, and that's pretty high. So I don't think that such high weightages are sustainable as well. So while I think there's a good trading rally in the next few weeks, months, we can expect on the banking side, but I would be a bit cautious. And the better way, according to me, to play the lenders is through the multi-product NBFCs. Now, see what numbers came through from L&T Finance. I think very good numbers coming through from there. Of course, there are some red flags because they have a large rural book, but if they're able to manage it better, the management is pretty confident of a 20% plus type of a growth rate. And I would say that their net interest margins, their credit costs are in line with the best in the industry now.
Okay, let me go across to Rabinder. Kusumgar has made a stellar debut on the street with MK initiating coverage with a buy, target price of 800 rupees a piece. And the brokerage remains bullish on the company's aerospace and defense segment and improving profitability as well. Rabinder here with more details.
Whereas Kusumgar Limited made a strong market debut with the listing at a around 36% premium as compared to issue price. And following the listing, MK has initiated coverage on the stock with a buy rating and target price rupees 800, which imply around 31% of the upside from the current market price. Brokerage believes that the company's biggest strength is company's aerospace and defense fabric business, which contribute to nearly 45 to 50% of revenue and delivers the highest margin. And despite this, Kusumgar has only 3 to 4% share of the domestic market, leaving significant rooms for the market share gains. And MK expect that the strong growth will be supported by rising global defense spending, India's free trade agreements, and the company's focus on high entry barriers products. And Kusumgar is also one of the few military parachute fabric manufacturers globally outside the China and US, giving it strong competitive advantage. And another key positive is that its diversified business model. While defense revenue decline in FY26, strong growth in the industrial and outdoor segment helped cushion the overall impact, and this also helped the company to improve its EBITDA margin to the highest among its listed peers. And looking ahead, MK expect revenue, EBITDA, PAT, CAGR of 34%, 35%, and 46% respectively over FY26 to 29 as defense ordering recovers and all four segments scale up. And they also believe that the company will move from a net debt position to a net cash position by FY29, further strengthening its balance sheet.
Okay, Rabinda, thanks for taking us through that. So that's MK's view on Kusumgar, initiated coverage on the stock that has just made its D Street debut today. And it's been a stellar move post that debut, 42% uptick coming in on Kusumgar and very close to that 600 rupee per share mark. Deepan, also was wondering if you've had a chance to look at the numbers coming out of Groww. Solid set of numbers coming in. The profit has almost doubled. The EBITDA has doubled on a year-on-year basis. Revenue growth is also looking rather robust at 66% year-on-year. The con call is underway of Groww. We've got the flashes on the bottom of the screen, and one statement that really stands out is that they've received license for trading US stocks on the platform, and currently that is in the testing phase. Now, this could be an up-and-coming segment for a lot of companies like Groww, Angel One. Deepan, how are you looking at some of these companies? You did say that some capital market-related companies look good. Your view here? Okay, we've snapped that connection with Deepan. We'll take that conversation ahead on the other side of this very short break where we try and fix that line once again. But stay tuned and we'll be right back.